Hi class, Professor Viersen, and what I'd like to do is do a couple videos on problem number 4-40, and the reason is because the new version of the textbook uses what's called the net method for recording journal entries for merchandising firms. And it's a little bit different than in the past. So what I'd like to do is, first of all, look at it from the perspective of being the purchaser. Okay, so it says that we're going to journalize the transactions on the books of retrofittings or furnishings, assuming the net method is used. And the first thing Retro Furnishings does is they purchase $7,200 of merchandise from DM Furniture Warehouse on account. So remember, on account means accounts payable. Terms, 315 net 30. So you get a 3% discount if you pay it within 15 days. Otherwise, it's due in 30 days. And then it says FOB shipping point. That means the buyer has to pay for the shipping, okay? And that's, in this case, Retro Furnishings is the buyer. The cost of good, DM Furniture House, is $4,300. Now, this cost of goods is not used when you're the purchaser. It's used when you're the seller. So it's extraneous information. So you need to get used to, sometimes in accounting, they give you more information than you need. Okay, so first of all, let's look at the July 4th transaction. And when you purchase something, you obviously are going to debit, in this case, inventory, and you're going to credit accounts payable because we purchased it on account. So you either purchase it with cash or on account. And the amount of the debit then is going to be 7,200 times 0.97, 97%. Or if you'd like, you can just say 7,200 minus 3% because that's the discount, but it's the same as multiplying it by 97%. Okay, so then that amount we had was 69.84, 69.84. We'll check the work, and it says fantastic. So we purchase the inventory $7,200, but because we're using the net method, we have to take the discount out up front before we even pay for it. Now, Retro Finishings paid a $450 freight bill. Whenever you see the word paid, that means cash. It goes down, so that's a credit. And when you pay for the freight, and we do have to pay for the freight because it's FOB shipping point, you add it to the inventory cost. Okay, and then the other account will be cash. And what I like to do is I like to recognize what the transaction is and put in what is the debit and what is the credit even before I calculate the amount. Okay, in this case, it's just given to us. But the idea is I said, okay, we have to pay for the shipping. That's a debit to inventory, a credit to cash. And then I look to see if I have to calculate. No, they just gave it to me. Now we're going to make a return of $1,500 of merchandise from the July 4th purchase that we had. Again, the goods were $900, but we're purchasing, so that does not apply to us. So when you do a purchase return, you're basically reversing your purchase. So the return is going to now debit accounts payable because we're going to decrease it, and we're going to credit inventory, and the amount will be 1,500, again, times 97% or 0.97, or you can take 1,500, subtract 3% of that, and this gives us 1,455. 1,455. Check my answer. Nice work. All right, now I chose this problem partially because it has a partial payment where you take the discount, And then the rest of the payment, you are outside of the discount period. So the first one is retro furnishings paid $3,400 of the invoice less the discount. So again, whenever we pay something, we know our cash goes down. So we're going to reduce accounts payable. By the way, accounts payable is a liability, has a normal balance of credit. So we reduce it with a debit that you learned from the previous chapters. And we're going to reduce cash because when we pay for something, our cash goes down. The amount will be $3,400. And because it's within the discount period, it'll be times 0.97 again. So the amount our accounts receivable goes down is $32.98. The amount our cash is paid out is $32.98. Check the answer. Well done. And now the last and the most difficult of the journal entries is now retro finishing is going to pay the amount owed on July 4th invoice. This is outside of the discount period. Notice July 4th, 15 days. We had to pay it by July 19th, and we didn't. So we're going to lose that discount. So the journal entry is going to look like this. When you're outside of the discount period, we're going to debit accounts payable because we're still paying off the payable. We're going to debit inventory, and this is what's different. We have to add the amount of the discount loss to the inventory because the inventory now actually cost us more. And we have more inventory. And the cash is going to take care of these two added together. The accounts payable is going to be the 3 accounts payable that we had before. Notice we credit it for $69.84. We debit it for $14.55. And we debit it again for $32.98. So if we were looking at this, we would go 6984 minus 1455 minus 3298 equals. So in order to get rid of the accounts payable, we're going to debit it by 2231. Inventory is the discount that we lost. Okay, so we have to figure out then, if you don't count in the discount, we're going to have to go in and figure out how much was remaining if there was no discount. So that's going to be $7,200 because that's what it was without the discount. Okay, and then minus $1,500, again, we're calculating without the discount, and then minus $3,400. Okay, that's the amount of cash we're going to pay, is $2,300. And if we use that same amount, we multiply this times 0.03, which is the discount we lost, and it gives you the amount of added cost to the inventory because we did not get the discount. And it says fantastic. And so we've entered the journal entries for when you're the purchaser with FOB shipping point, and then we make a partial payment, and then of course we pay the rest off. Okay, so I'm going to conclude that, and we'll come back and we'll do it from the seller point of view.